Good day, students. Once again, I will be doing the topic in financial accounting and mostly financial accounting 2 or financial accounting 1, depending to an institution. This question is based on the subsequent cost and the replacement of the part. Is very close, is similar, is in fact is the same as the property, plant and equipment. But in the case where now part of the asset has been damaged, then that part of the asset must be derecognized, where we also take into account the subsequent cost or the cost that are to be capitalized, and that is to be ignored in this type of question or in this question. The following costs were incurred on a specialized mining vehicle on the 1st of March in the year 2006. And before I proceed, I want to start with the requirement so that you can check if is this in something that you would like to go through it or not. Before you listen to me, yet maybe it's not something that is relevant to your studies. We are to calculate the cost to be capitalized on the date of the acquisition. We are to calculate the depreciation and the carrying amount of the asset at the end of the accounting period. We are to test whether the asset should be impaired at the end of this accounting period where the carrying amount was calculated, because impairment is tested at the date where the carrying amount or up to the time where the carrying amount is calculated. Then after, we have to do journal entries to show the replacement of the engine at the end of September 2006. So this engine must have been damaged, therefore now it must be derecognized or removed from the books of the business. Number 5, we are to calculate the depreciation and carrying amount at the end of the year 2007. Then after, we have to test whether the asset should be impaired at the same accounting period, 31st of July in the year 2007, where the carrying amount was calculated, meaning we have to calculate a carrying amount up to a given date. Then after, we test, meaning we will have to be given what we call RA, meaning the recoverable amount at the end of the accounting period. And also here we have to be given a recoverable amount at that date, 31st of July 2006. And at that same date, carrying amount would have been calculated. Then after, we compare the carrying amount with the recoverable amount, and also the carrying amount with the recoverable amount will be compared here to test either was there any impairment of this asset at the end of the two consecutive accounting periods. Now we come to the information that is provided to us. This vehicle, specialized for mining purposes, was purchased at a price of 3,500,000 rands, and import duties were incurred to the value of 240,000 rands, and we incurred administration cost of 6.5, and the driving training of 15,000 rands that was incurred by the company. So now we first need to identify which of these costs will be capitalized and which of these will not be capitalized. The price will obviously be capitalized. The delivery cost or transportation cost of this transport to the premises of the business will have to be capitalized. But the administrative cost and the driver's training will not be part and parcel of the cost to be capitalized for this specialized mining vehicle as at 1st of March in the year 2006. Then below that, it says over and above the main body of the vehicle, the following significant parts were identified. The cost of these parts is included in the purchase price of 3,500,000 rands. So now we speak of what we call significant or major parts of the main asset. So this main asset has major parts, and these major parts are divided into tires and the engine. Therefore, now they will have their independent useful life and their major cost, therefore, and then after their residual value where it is necessary. So now we have the useful life of the tires, and these tires, they had a huge amount of cost of 400,000 rands, and the engine has a cost of 850,000 rands, and the useful life of 4 years and 3 years engine and the tires respectively. Tires at the end of 3 years are expected not to have any value. However, the engine after 4 years is expected to have the residual value of 150,000 rands. And be mindful that the total cost of these significant parts is already included in the purchase price of this specialized motor vehicle for mining purpose. And now, if they are included, be mindful of the fact that it was said over and above the main body, meaning there is the main body, which is a significant part, there is tires, which is a significant part, and we also have the engine, that is a significant part of this specialized motor vehicle for mining purposes. So now, meaning if we want to calculate the cost of the main body for this specialized motor vehicle, it will be 3,500,000 rands minus 400,000 rands. Then after we minus 850,000 rands, meaning the cost of the main body will be 2,250,000 rands. So the main body is independently costing 2,250,000 rands. Therefore, now we continue on that same note. Then we say the main body has a useful life of 15 years. So the main body that cost 2,250,000 has a useful life of 15 years and a residual value of 200,000 rands. And that is for the main body. Relevant cost. What are the relevant costs? These are the costs that are to be capitalized. So we are referring to that 240,000 rands, which is for the import duties that were incurred. Costs have to be allocated among parts in proportion to the cost of each part. So now it says the costs that are relevant, in this case being the import duties or the delivery cost for importing this motor vehicle, which amount to 240,000, must be allocated or apportioned in proportion to the cost of each part. Remember, we have the part being tires, second part is the engine, third part is the main body. So now, and the total cost of all the parts is 3,500,000 rands. If you add the main body, you add the tires and the engine, that will give you the 3,500,000 rands. So now they say we must allocate the import duties to the three different major parts of this asset in proportion to their cost. So now let me do this immediately. Then I will have the purchase price. I will say I will have the main body, and the main body is main body. Main body will be allocated at 2,250,000 rands. Divide this by 3,500,000 rands, which is the total cost of all the parts, times this by 240,000 rands. This will give me the allocation of the relevant cost to the main body. Then after I have the engine, of which the first one is the tires first before the engine. Then my tires cost is 400,000 rands. Then I say 400,000 rands, divide this by the total cost for all the parts, 3,500,000 rands. And I multiply this by 240,000 rands, meaning the cost that needed to be apportioned. And the last one will be the engine. And the cost of the engine is 850,000 rands. Then 850,000 rands, divide this by the total cost of all the parts, which is 3,500,000 rands. And I multiply this by 240,000 rands. This will give me the total cost to be allocated, or the total relevant cost to be allocated to the engine. Then now this will be 2,250,000 rands. Divide this by 3.5 million, and I multiply this by 240,000. This gives me a total of 1 million, or sorry, 100 54 of 154 15,429. It cannot be 15,000. Check that again. 2,250,000 rands divide by 3,500,000. Then multiply this by 240,000 rands. Then I get 154,286. 286. Then I allocate the second cost of 400,000 rands, being the tires, divide by 3,500,000 rands, and I multiply this by 240,000 rands. This gives me a total of 27,286. The last one is 850,000 rands. Divide this by 3,500,000 rands. Term this by 240,000 rands. This gives me a total of 58,286. 58,286. So now these are the total cost that are to be allocated to this major parts of the asset. Just to reconfirm the first one, if the calculation 2,250,000 rands, divide this by 3.5, multiply this by 240,000 rands, 2,250,000 rands, divide by 3,500,000, times by 240,000, 154,286. Yes. So now these are the relevant costs that are to be allocated. Remember, we still have to add 2,250,000 rands, and we still have to add 400,000 rands for this becomes, or for this to become the cost of each of the parts, 850,000 rands. Therefore, now that will give us the total, but there is not enough space for all of them. But we have calculated, and I will bring that total when I'm doing the final calculation. So now we have taken into account this relevant cost. Then it says the vehicle must be certified as safe for mining purposes every 4 years, and the first certificate obtained at a cost of 11,000 on the date of the acquisition. Remember, the date of the acquisition is the 1st of March. 1st of March, and remember the accounting period ends on the 31st of July every year. So now this is the certificate that is needed before this vehicle can start, so that it is ready and safe for mining purposes. On the 30th of September 2006, the engine was damaged beyond repairs and replaced by the new engine at a cost of 950,000 rands. The supplier granted a credit of 115,000 rands for the damaged engine. The useful life of the new engine is 5 years, and the residual value of this engine is 120,000 rands. And I want to stop there and wait about this last part of the question, where we are given the recoverable amount for 3.7 end of the year 2007, and recoverable amount of 2.7 at the end of 2007, and 3.7 at the end of 2006. These are just the recoverable amount. So now from this information, I can immediately now go straight and do all the calculations, because my engine is damaged and it is replaced by the new engine costing 950, and the damaged engine, we received an amount of 115,000 from the creditor. So now, though this engine was damaged and it was damaged beyond repairs, but the creditor still saw that there was a value or a salvage value of this engine that amounted to 115,000 rands. So now the carrying amount of this engine at the end of September did not all become a loss. And let me stop that there and I'll explain it as I proceed. So now we were required to calculate the cost to be capitalized on the date of the acquisition, and I am very strict with this. We are required to calculate, not to disclose. Disclosure and calculation are two different things, and we are required to calculate, not to disclose. And again, we are required to calculate, not to disclose. So I will start doing the calculation, then after I disclose my calculation in the property, plant and equipment note kind of a format. But I would like to respond straight to the question, as the question says I must do the calculations. So now in doing the calculations, I need to calculate the cost for this asset that we have. And now the cost price will be the cost price for all these parts. The cost price will be for the main body. And I know that the main body is costing an amount of 2,250,000 rands plus 154,286, 154,286. So the cost of the main body will be the sum of the two, 154,286 plus 2,250,000 rands. This gives me a total of 2 million. This gives me a total of 2,404,286. This is the cost of the main body. Then I go to the cost of the tires, and the cost of the tires will be 40,000 rands. So there will be 400,000 rands plus the relevant cost of the tires, which is 27,286. 27,286. Then after this will give me the cost of the tire. 400,000 plus 27,286. This gives me 427,286. Then after I go to the cost of the engine. I go to the cost of the engine. The total price of the engine will be 850,000 rands. 850,000 rands as it was given, plus the relevant cost that was allocated, 58,286. 58,286. 58,286. So 400,000 plus 58,286. Then this gives me 400. It is 850,000 rands plus 58,284. Check if that is 284. 286. It is 286. Answer is 908,286. 908,286. 908,286. 908,286. So now that will be 908,286. So now this is the total cost for 27,286. Then let me just reconfirm that all the calculations that I have are accurate and correct. The tire was 400,000, yes. 850 was the engine, and 2,250,000 was the main body. And if you add these three parts, Just to confirm, if you add these three parts, which is 850,000 plus 400,000 plus 2,250,000, this gives us 3.5 million. Hence, even 400,000 of the tire, divide this by 3.5 million, multiply this by 240,000, it gave us 27,426. Let me just confirm. 400,000 divide by 3.5 million equals, times this by 240,000. It is 27,429. 27,429. 27,429. Okay, this I was just suspecting that. 27,429. So this is a bit different there. I was just noting as I was calculating, also remembering the numbers. So it's 27,429. 27,429. Then this will be 429. 27,429. And if we add all these three, then that will give us the total cost of all these three parts. Now proceed on that same note. We have the cost of the tire, cost of the engine, and cost of the main body. And we have calculated the cost to be capitalized. So now, after calculating the cost to be capitalized, remember, we have calculated this 158, which is import duties, 27,429 and 58,286. That was the calculation of the import duties. If you wanted, you could have said there on top import duties. We calculate, then after we added the cost of each of the major parts for this asset. Now, after calculating this, then we can say total cost. We can say total cost. Then we have the main body. The main body cost 2,404,286. Tires 427,429. Engine 908,286. So the total cost for this asset is one amount, and this one amount will be 2,404,286 plus 427,429 plus 908,286. 908,286. Then this gives 3,740,000. 3,740,000 rands. So now this is before the certificate was taken into account. So now we need to add the certificate. Then we say certificate, and our certificate was costing 11,000 rands. Then after adding the certificate and you say plus 11,000 rands, this gives us 3,751,000. 3,751,000. I'll just ignore that is 1, meaning here we should have put 28 instead of 29. That is just some of the dynamics of rounding off. then we say 28 here instead of 29, so that it come exactly to be 3,740,000 and 3,751,000. So now this is our total cost. As it was required, this is our total cost to be capitalized. So now calculated our total cost to be capitalized. Remember, we were required to calculate, not to disclose. As I said to you that I will do the calculation, then after I do the disclosure a bit later on, in case you are required to put this in the disclosure format. So now we have calculated the cost of this asset. Then now we have to go back to the information provided, meaning we have responded to requirement number 1, where we were to calculate, and we did calculate the cost to be capitalized on the date of the acquisition. And the cost to be capitalized on the date of the acquisition will come up to 3,751,000, which is made of the main body cost and the import duties, tire cost, import duties allocated, and the engine cost plus the import duties allocated. Then after we add all of that, we take into account again the certificate, then that will give us the total cost for this asset to be 3,751,000 rands of the total cost to be capitalized. Then we have responded, as I said, to the first part of this question. Then now we were informed that at this date of September, the engine was damaged beyond repairs. Now we need to know the accounting period for this asset, and the accounting period is 31st of July every year. And this asset was bought and available for use on the 1st of March, meaning it was March, April, May, June, July. So now this engine was in the business for 5 months in the year, or in the accounting in the year 2006, or in the accounting period ending 30th or 31st of July. So now it will be March, April, May, June, July, which is 5 months, because it was available from the date it was bought, which is March, up until 31st of July. And this is 5 months. March, April, May, June, July, 5 months. So now this engine was in the business from March until July, the end of the accounting period, which is 5 months. Then that was the end of the accounting period, 2006. Therefore, now we started another new accounting period, which started on the 1st of August. On the 1st of August until 30th of September, the engine was in the business. So August, September, which is equal to 2 months, this engine was in the business, and it was damaged at the end of September in the 2007 accounting period, because the 2006 accounting period ended on the 31st of July. On the 31st of July, it was the end of the 2006 accounting period. Therefore, now depreciation must have been accounted for this asset up to the end of that accounting period, for all the parts of this asset or major components of this asset for the period of 5 months, including the certificate for ensuring that this asset is safe for mining purposes. So now I have to calculate the depreciation for this asset until the end of the accounting period. Then after, I calculate the depreciation only for the next 2 months. So now my main focus is to calculate depreciation. That is my main focus. I am calculating depreciation first, and this is depreciation for all of these parts. Main body first, and the cost of the main body. Want to find the cost of the main body. Okay, I do not have the totals here because of the space limit. The main body is 2,404,286. It is 2,404,286 minus the residual value. I had the residual value for the main body, and the residual value of the main body was given in the information provided as 200,000 rands. There was the main body has a useful life of 15 years and the residual value of 200,000 rands. So now it is on the straight line method of calculating depreciation. Then I minus 200,000 rands. Then when I minus 200,000 rands, this will give me 2,204,284, which we call this a depreciable amount. We call this a depreciable amount. Depreciable amount. Then we divide this by 15 years. Divide this by 15 years. 2,204,286. Divide this by 15. I get to 146,952. This is depreciation per annum. Then I say times this by 5 over 12. Then I'll get depreciation only for 5 months. Times 5 over 12. Then the depreciation will be 61,230. 61,230 depreciation from March until 31st of July 2006. Therefore, now I got that depreciation. Then I go to the tire. The tires had a cost, just to refresh the cost price for the tires after the import duties were capitalized. The cost of the tire is 427,429. I say this must be 429, so that there's no, so 428, so that there's no rounding off. We remove that 9 into 8 so that we don't have that decimal of the cent, if you saw that previously, if you still remember. So now it is 424, 427, 428, 427, 428. There was no residual value for the tires. We can divide this by 3 years. Then we say 427,428. We divide this by 3 years and it gives us 14,000 rands 476. 14 or 142,000 in fact. 142,476. Times this by 5 over 12. We are only looking for the depreciation for part of the year, which is 5 months, times by 5 over 12. From March, this is 5,365. 5,000 or 59,310. 59,365. This is the depreciation for the tires from March until 31st of July 2006. Then now we go to the other part that we have, which is the engine. And we say the cost of the engine is 908,286. It is 908,286 minus the residual value of 150,000 rands. And this will give us the depreciable amount. We have 908,286 minus 150,000 rands. This gives us 758,286 being a depreciable amount. Divide this by 4 years and it will give us depreciation for the full year, and it will be 189,572 times this by 5 over 12 times by 5 over 12, and this gives us the total of 78,988. 78,988 is the depreciation for the engine for a period of 5 months from March, being March until 31st of July. Then we do the certificate. we do the certificate, and the certificate I should have left at least some space in between. Certificate was costing 11,000, and the useful life of the certificate, I just have to go and confirm that it was 4 years. Certificate was is for 4 years. There is the 4 years of the certificate to the value of 11,000 rands. So that certificate has a useful life of 4 years. So we just divide the certificate by 4, and we get depreciation for 1 year. Divide by 4, which is 2,750 times by 5 over 12. Then we get depreciation for 5 months times 5 over 12, and this will be 1,145, which is 146, rounding off to 2 decimals. So now these are the figures that we have, and I want to now bring your attention to the carrying values. Bring your attention to the carrying values. Just change the color of my pen. The carrying amount for the main body at the end of, remember, this is depreciation at 31st of July 2006. Then after, we need the carrying amount at the same date, and the carrying amount will be the cost of 2,410,284. Was it 284, not 286? 284, because I was very popular with 286s. Yes, 286, not 284. Just to confirm, main body 286. A bit surprised because I have 286 as all my figures are 286. This is 286 minus, so that is 286 there, minus 61,230. But my depreciation still was calculated on the correct figure. So now carrying amount will be 2,404,286 minus 61,230. 61,230, and this gets 234,000. The carrying amount is 234,000, or 2,343,000 and 56. That is the carrying amount for the main body. Then the carrying amount now for the tires. Carrying amount for the tires will be, the cost of the tire was 427,428 minus the depreciation for 5 months, 59,365. And this will give me the carrying amount 427,428. 428 minus 59,365, and this gives me a total of 368,063. That is the carrying amount, and this is the carrying amount for the tires, 368,063. Then I come to the engine, then I say carrying amount is the cost price minus accumulated depreciation. Cost price is 908,286 minus accumulated depreciation of 78,988, and this will give me the carrying amount 908,286 minus 78,988. Then I get to 82,000, or 829,298. 298 is my carrying amount. Then I do now the carrying amount, and this is the carrying amount for carrying amount for the certificate. The cost of the certificate is 11,000. The accumulated depreciation is 1,146. Therefore, the difference between the two will be the carrying amount minus 1,146 rands. Therefore, it will be 9,854. Then after, I can calculate my total carrying amount. My total carrying amount will be carrying amount of the certificate, which is number 4, plus carrying amount number 3 of the engine, 829,298, plus number 2. My number 2 is, that's not number 2. My number 2 is that one, 368,063, plus number 1, and my number 1 is 2,343,056, and this gives me the total of the carrying amount. And the total of the carrying amount is 3,550,271. So this is the carrying amount. Then I can say carrying amount versus recoverable amount, if there was a recoverable amount that was given. Let me put this carrying amount there as 3,550,271. Then after, we have our recoverable amount, and our recoverable amount was 3,700,000 rands. I think so. Let me just confirm the figures. Whenever you are given recoverable amount at a specific date, you must calculate the carrying amount at that date so that you can compare the carrying amount with the recoverable amount. In this case, at the end of July 2006, end of July 2006, remember, end of July 2006 is 5 months from the date the asset was bought. Remember, this asset, being a specialized motor vehicle, was bought at the 1st of March. There is the 1st of March. So if we say March, April, May, June, July 2006, we get to the date of which that date is the date of the 31st of July 2006. Up to this date is 5 months down the line. So now they give us our recoverable amount of the vehicle as 3,700,000 rands. And the reason why they are doing that is because they want us to test for the impairment, which was a requirement of number 2. The requirement number 2, we were told that. And they said also requirement number 3, we calculated the depreciation and the carrying amount. So now we responded to this question, calculated the depreciation. There we do have the depreciation. First of all, let me make that one very clear. Depreciation for the main body, there is the depreciation. Depreciation for the tires, there is the depreciation. Depreciation for the engine, we have it. Depreciation for the certificate, we have it. Carrying amount, do we have it? Yes, we do have carrying amount for, let me just change my color there. The carrying amount for the main body, there is the carrying amount. Show there's carrying amount. And here the carrying amount for the tires. And the engine, there is the carrying amount of the engine. Then after, we have a carrying amount for the certificate, which is that amount. And we added all of them, and that became one carrying amount. So now we calculated all the carrying amounts as it was required. So we responded to number 2, and this is therefore now number 3, where we are to test either there is impairment or not by the end of the accounting period, 31st of July 2006. So now we have to say RA minus carrying amount. We can see our recoverable amount is more than our recoverable amount is more than the carrying amount. Therefore, now the difference will not be negative but nil. Therefore, we say impairment loss is 0 or no impairment loss. No impairment loss. So now there is no impairment loss in this asset. Why? Because the carrying amount is less than the recoverable amount. If the carrying amount was more than the recoverable amount, the difference will be an impairment loss. So now we have responded in this question 1, question 2, and question 3. Remember, question 1, we were required to calculate the cost to be capitalized, and the total cost to be capitalized was calculated here to be capitalized. Total cost to be capitalized came to this figure, and we showed all the workings, which all the workings started by calculating the import duties. There were the import duties, there were the import duties, and there were the import duties. Added the purchase price, then that gave us the total cost to be capitalized. So now we have to go to the next part of the question. I will still structure this in a bit format of the tip, but we were required to calculate. We can just do the calculations as we were instructed to do so. Then now we go to the third part of the requirement, or third requirement, or fourth, because we have done this one already. So now we are under number 4. Journal entries to show the replacement of the engine at 30th of September 2006. Very important, big question. We are doing general entries for the replacement of the new engine. So now, how do we show these journal entries? This is where we begin. First of all, we need to know that the engine was damaged. Let us go back to that date. We were told that at the end of September, on 30 September, 2 months down the accounting period. Remember, the accounting period for this current year ended 31st of July 2006. So we said August and September. At the end of September, this engine was damaged beyond repairs. Therefore, it means 2 months down the line, the engine was damaged. So now we must derecognize this engine from the books of the business, record all the journal entries to derecognize this engine from the book of the business, or to replace it by the new engine. First of all, we need to, under number 4, first record the depreciation for this engine. That is the first thing that we need to do. Record depreciation for this engine, which is depreciation for the 2 months the engine was in the business, because August, September, the engine was in the business. So we need to record the depreciation. Then after, we say credit accumulated depreciation, depreciation, accumulated depreciation, plus impairment loss. So now we need to calculate depreciation on this engine for the 2 months period. And I will just take things very shortly, because we know that this engine has a depreciation for the full year as 169,000. Let me just use a different color of the pen. Now, the depreciation for the full year for this engine was 189,572. That was for the full year. If we say this times by 2/12, it will give us depreciation only for 2 months out of the 12 months. Here we're looking only for the one for 5 months, and that gave us depreciation for 5 months. But now we only need it for 2 months period, which is August and September. So now I can just go to my calculations, and I say 189,572 times by 2/12. Very good shortcut to be mindful of. 189,572 572 times by 2 over 12. Then this gives me a total of 31,595. 31,595. 31,595. So this is the total depreciation for the damaged engine for the month ending 31st of September 2006, which is for August and September. Now I need to know my total carrying amount. And when I know my total carrying amount, then I will be able to determine the impairment loss for this engine. Then after determining that impairment loss, then I record that under the accumulated depreciation and impairment loss. Now, remember, we have a depreciation for the first 5 months. And the depreciation of the engine for the first 5 months, it was 78,988. And the depreciation for 2 months current year is 31,595. So I need to know the carrying amount at the date this asset was damaged. Let me repeat that. I need the carrying amount of this asset at the date it was damaged. Remember, the carrying amount is the value of the asset at that date. So now I need to know the value of this engine at the date it was damaged. And the date it was damaged is 30th of September 2006. So I already do have depreciation until the end of September, which is up until the 2 months of August and September. So now I need to say how much will be my carrying amount. So now I'm looking for the carrying amount at 30th of September, the 9th month in the year 2006. And my carrying amount will be the cost of the engine being 908,286. Let me confirm if that is my real cost. Yes. Then I have to subtract the depreciation of 78,988 depreciation for 5 months. 78,988 minus 78,988, then minus 31,595. Then this will give me the carrying amount of this engine at the end of September 2006. 908,286 minus 78,988 minus 31,595. Then it will give me 797,703. So now this is the value of this asset at the date it was damaged, or this is the carrying amount of this engine at the date it was damaged. So now we are dealing, remember, with the damaged engine. If you want to do your workings and show them well in details, damaged engine. So now this is the carrying amount at the date this engine was damaged. Then the question, if this engine was damaged, did we sell it and get any money? Because if we sold it, we got any money. Therefore, that means the carrying amount was not all lost, because this is the value of this asset. And if we don't get anything out of this value, it means this entire carrying amount becomes a loss. But if we received some money from the sale of this engine or from the trading of this engine, therefore that will mean part of the carrying amount was not all a loss. But if there was nothing received, therefore the full amount, the carrying amount of this asset at the date it was damaged, become all a loss. But our supplier granted us a credit, meaning the supplier said that there is still a value for this engine, and the value for this engine is 115,000. So now, meaning out of this 115,000 of the damaged engine, it means that at least we did recover part of it, because the carrying amount for this engine was 797,703. But the supplier was able to say, I can give you an amount of 115,000. So now, meaning we received some value of this engine which was damaged from the creditor. So now the creditor was able to give us 115,000 rands. Therefore, now it means there is part of the carrying amount that was not lost. But if there was nothing received, then the full amount could have become a loss, 203. So now we have this accumulated depreciation, which is, let me just confirm that we have 797,703 minus 115,000 rands. This gives us a total of 682,000. Yes, 682,000. Just talking while I'm writing. 682,703. So now this is the amount that is a loss. This is a loss, meaning this part of the carrying amount will not be recovered. Remember, the value of this asset being the carrying amount of this asset, by the date this engine was damaged, it was 797,703. That was the value of this asset, and it was damaged. And when it was damaged, the supplier was only able to give us the value of 115,000. So now the rest of the carrying amount became a loss. And let me emphasize on this: if the creditor did not give us this amount, or if we could not sell this engine because it was damaged, therefore now the full carrying amount at the date the engine was damaged will become all of it as a loss. But if there is part that was recovered or money that was received on the sale of this engine, therefore now that will not be a loss. Then we deduct it from the carrying amount. Then it's only the difference that becomes a loss on the damaged engine. So now I think I have a bit emphasized that enough. So now let me proceed by saying this is a loss. Therefore now this will be recorded as impairment loss. So now let us go and we record this as impairment loss. It's not the impairment loss that you test through the recoverable amount. And I want to highlight the fact that these were just the workings. You can do the workings and you just circle them like this so that the lecturer can see where you did your workings. So now we have to do the journal entry, and you say impairment loss. Impairment loss. And the impairment loss will be 682,000. I don't know why I said 28,000. 682,703. Then that is on the mining vehicle, which is the engine. Then after we have accumulated depreciation, and impairment loss, accumulated depreciation and impairment loss, 682,703. So now we are recognizing the impairment loss. So now our total accumulated depreciation for this asset will be this accumulated depreciation plus depreciation of the current year plus depreciation of the previous year. That becomes our total accumulated depreciation. Depreciation for the first year was 78,000. Remember that, 78,988. Depreciation for the 2 months, 31,000, and there's impairment loss of 682,703. That is due to the fact that we received we received 115,000 from the creditor, or there was a credit granted by the supplier, which is trade-in value of 115,000, though the engine was damaged. Therefore now meaning our total accumulated depreciation, total accumulated depreciation and impairment loss and impairment loss equals 78,988, 78,988 plus 31,595 plus 682,703. So now this will be our total accumulated, plus 31,595 plus 78,000 plus 78,988, which gives us 793,286. So now we must remove this completely out of the books of the business. Then after, we must also take into account the 115,000, which was granted of credit by the supplier. So now we are de-recognizing. Now we are de-recognizing the engine from the books. Therefore, now the de-recognition of the engine from the books will be debiting the accumulated depreciation of the mining vehicle and impairment loss. Remember, accumulated depreciation increases on the credit side. So now when we debit accumulated depreciation plus impairment loss, we are removing that accumulated depreciation from the books of the business. And we remove it on the debit side, 793,286. Then after, we recognize the creditor who granted us a credit. And the reason why the creditor is recorded on the debit side, and the debit side being 115,000 rands. And I want to make it very clear that this 793 is on the debit side. Then on the credit side, we recognize the engine cost. The engine cost. Remember, the cost of the engine is recorded on the debit side. So now, if we remove it from the asset of the business, we recognize it on the credit side, or we remove it on the credit side. And that will be 908,286. And I want to be clear with this 115,000. Remember, we are buying another engine. And the engine that we are buying is costing 950,000 rands. And we are not buying it for cash. But our creditor said that he will give us the new engine at the cost of 950,000. But we don't have to pay 115,000, because 115,000 is the value of the old damaged engine that we gave back to our supplier or to our creditor. So now it's a trade-in value. That is why it's recorded on the debit side, because it is reducing the amount of 950,000 that we owe to our creditor, because a creditor is increasing on the credit side, it's a liability. But if we are given a trade-in value, therefore now we don't pay the 115,000. That means we are reducing the liability that we owe to our creditor by 115,000. That is why 115,000 is recorded on the debit side. So now this is the debit side. You want to make that very clear, debit side, and this is the credit side. So now if you say the total accumulated depreciation and impairment loss plus the 115,000 on the debit side, that should give you the same amount of the cost of this asset. And let me just show you that with immediate. If you say 793,286 plus 115,000, this should give you the same cost that you are recognizing on the credit side. 908,286 is the figure. So now from this point, the old engine is de-recognized. And the minute the old engine is de-recognized, therefore now we need to recognize the new engine. And the new engine is to be recognized at its own cost. Therefore now we say engine cost, mining vehicle, don't forget to say mining vehicle. It is 950,000 rands. Then after we say creditor because it was bought on credit, creditors 950,000 rands. Then the question is, if we are granted a credit of this, remember there was the credit of 115,000, this at the end of the day, end of the accounting period, will decrease our creditor by 115,000. We are just doing this for the recognition of the asset. Otherwise, we don't owe the full amount our creditor because there is part which was a trade-in value of 115,000 rands. So at the end of the day, we owe the creditor 950 minus 115,000 rands. This is what will be appearing at the end of the accounting period, assuming that there was no other payment made during the year. So now let me proceed on that same note. We have now recognized the new engine. Remember, the new engine is available at the end of September in the year 2006. So now it will be October, November, December, January, February, March, April, May, June, July. So now meaning the depreciation for the new engine will have to be for a period of 10 months. Now I have responded to question number 5. Calculate the depreciation and the carrying amount. That's number 4. Journal entries to show the replacement of the new engine. Therefore, now we have derecognized and replace the old engine with the new engine. Show the replacement of the engine at 30th of September. Then now number 5, which is just before the last question. We are to test whether the asset should be impaired at the end of this accounting period. When there is an impairment, you need to calculate carrying amount at the end of that given accounting period. We need to calculate the carrying amount at the end of the given accounting period. So now meaning we need to know the carrying amount at 31st of July 2007. And you need not to forget that we already had a carrying amount, meaning carrying amount at the end of July 2006, 31st of July, 2008, 31st of July 2006. Why my dates now? 31st of July 2006. We have 2006 and 2007. So now that was the carrying amount at the end of July 2006. Let me just confirm the date. Yes, 2006, not 2008. So now we already have these carrying amounts calculated before. We only need to say these carrying amounts minus depreciation for the full year, because these assets would have been in the business for the full current accounting period. And also, the certificate would have been in the business for the full current accounting period. Therefore, now, this carrying amount minus the depreciation for the current accounting period. Then after, also with the main body, carrying amount minus depreciation for the current year. Remember, this is straight line method, so depreciation for the year remains the same. But we need to calculate depreciation for the new engine now. Depreciation for the new engine. New engine depreciation. And the depreciation of the new engine is the cost of 950,000 rands minus accumulated depreciation, and the accumulated depreciation for the new engine was already given to us, and they told us that the accumulated depreciation is 120,000 and the useful life for this new engine is 5 years. So now we minus 120,000 rands, and by doing so we get to the depreciable amount. It will be 950,000 rands minus 120,000 rands. This gives me a depreciable amount of 830,000 rands. Then divide this by 5. It will give me depreciation for the full year. And depreciation for the full year will be 166,000 38,000 rands, and I term this by 10 over 12. Term this by 10 over 12. I'll need to reconfirm this. 13,883. So now depreciation for the period of 8 months is 138,333. 138,333. 138,333. Not 13,833. 138,333. So now this is accurate. I've seen it. So now we have to calculate the carrying amount for this engine at the end of the accounting period. It will be 950,000 rands minus 138,333. Then we say minus 950,000 rands and it becomes 811,667. So this is the carrying amount for the new engine, and I still need to calculate the carrying amount for the remaining assets. Carrying amount for the remaining assets. Then now I have to go to the main body again. I have to go to the main body, and I still want to stick to my calculations. Main body has a cost. Main body carrying amount, cancel. Main body carrying amount. Main body CA is equal to the carrying amount of the main body. The carrying amount of the main body will be the main body at a carrying amount of 2,343,056 minus depreciation for the full year, which is 146,952. And why am I deducting the depreciation for the full year? Because the main body was in the business for the full current accounting period. So now I can say carrying amount at the end of the 2006 accounting period minus depreciation for the full year, and this will give me a carrying amount for the main body as a sum of 2,196,104. Then I go to the engine, and my engine carrying amount equals engine carrying amount 811,667. Then I go to tire is equal to carrying amount equals the carrying amount of the tires. Similar calculation will happen. Tire carrying amount previous year was 368,063. 368,063 minus depreciation of the tires for the full year. Depreciation of the tires for the full year is 142,476. 142,476. Then we get 225,587. 225,587. 225,587. Then we go to another now major part, which is the certificate. And the carrying amount of the certificate will be the carrying amount at the end of last year minus depreciation for the current year. Certificate had a carrying amount of check my certificate. carrying amount of the certificate was 9,854. There was the carrying amount 9,854 minus depreciation for the full year, which is 2,750, and this gives 7,104. 7,104. Then I can draw the line and calculate the total CA. This is carrying amount at the 31st of July 2007, end of the accounting period, plus 225, 587, plus 811, 667, plus 2,196,104. I get a total of 3,240,462. So this is the carrying amount. Then there was a recoverable amount at the end of this period. 31st of July 2007, recoverable amount was 2,700,000. 2,700,000. 2 million, and you can see that our carrying amount is above the recoverable amount. So the difference will result to an impairment. Minus 2,700,000. Then we get to 540,462. Therefore now this will be impairment loss. This will be impairment loss. And I did this without the disclosure, without the table. I just did the calculation as I was instructed to calculate. So now I have to go to the table format. And now I already have all the figures, calculations, and all the amounts. And all that I just need to do now is to structure everything in the table format, because most of the times you'll be given this in the table format. We were first in the beginning required to do the cost, or calculate the cost, and we start with the main body, and we have the purchase price, or the price, and this price is for the main body. The main body, and the main body had a cost of 850,000 rands. Then after we had the tires, and the tires were costing 400,000 rands. Then we had the engine, and the engine had a cost of 850,000 rands. Then there was a certificate, and the certificate was 11,000, and there will normally be a total column, but I will not have that much space for the total column. Then after we had import duties, this was part where we had to calculate the cost to be capitalized. And import duties was 154,286 when you are given this in a table format. Import duties were 154,286, and import duties for, that was the main body, the tires, 27,428, 27,428. I said this must be 8 so that there is no rounding off issue. 27,428. 27,428, and the engine was 58,286, 58,286, 58,286. Certificate must be separate, not written in that same line. Then after we have certificate independently, and certificate will be recognized at 11,000 rands of the cost. So now the total cost will be the sum of the two. Total cost will be the sum of the two. And if we add these two, draw a line here, we already have all these figures: 427,428, and this will be I know this main body is not 427. Main body is 2,404,286, and the tires are 427,428, and the engine is 908,286, and the certificate is 11,000. So now these are the costs that were required to calculate. And how did I calculate them in my previous method? I calculated all the costs that are to be capitalized, and I had here were they. There was 24, there was 424, there was 90, and the certificate was there 11,000. Total came up to 3,751,000. So I just did the calculation, not the disclosure, because I was not required to disclose the information in the property, plant, and equipment note. Then after, the second requirement was for me to calculate the depreciation and the carrying amount. I was to calculate the depreciation and the carrying amount. And to calculate the depreciation, I have to say residual value. Residual value for the main body was given as 200,000 minus residual value. Tires had no residual value. The engine had a residual value of 150,000, and the certificate had no residual value. Then now we have to get to what we call depreciable amount. And depreciable amount was really calculated by me, and I'm very sure of that. It's in the same page. Depreciable amount for each of these assets was calculated, and my depreciable amount for the main body was 2,204,000. Therefore, this will be cost minus depreciation, 2,204,286. Then we have 427,428, and the engine. Let me get to the engine. Depreciable amount of the engine was 758,286. 758,286. 758,286. 758,286. And the depreciable amount for the certificate will be 11,000 because there was no residual value. Then after now, depreciation per annum, we have depreciation. We have to say let us just say useful life first, because if you say depreciation, it will useful life, it is 5 years. Or no, useful life, it is main body useful life is 3 years. Let me confirm that. Oh no, it's 15 years. Yes, useful life is 15 years, and the tires is 3 years, the engine is 4 years, certificate is 4 years. So now we have 3, or main body 15, engine 4, tires 3 years. Then certificate we have 4. Then we say 5 months times by 5 over 12 times by 5 over 12 times by 5 over 12 times by 5 over 12, and this gives us depreciation. And now depreciation for all these assets, we already have calculated this one for the full year, and depreciation was for 5 months 59,365. I'm sure you're familiar with this figure. And depreciation for the tires, our tires depreciation was 78,988. I'm sure you're still familiar with that. Depreciation for the engine, wait, my figures are a bit up and down. For the main body, depreciation is 61,230. 61,230. And for the tires, depreciation for the tires was 59,365. 59,365. The depreciation for the engine, 78,988. 78,988, and this was 1,146. Let us confirm all those figures, and they are there somewhere, all of them. There we have main body 61,230, tires 59,365, engine 78,000, there we can see, and the certificate we had 1,146. So now all the figures are there already. Therefore now, since we have calculated all of this, then we can get to the carrying amount. And our carrying amount will be the cost minus accumulated depreciation. Cost, remember, it is 2,404,286. Accumulated depreciation is 61,230. Then that gives us a total of 2,343,056. We already have this figure. Then the cost of the second major part, which is tires, is 427,000. There is the cost, guys. There is the total cost. They are the total cost I'm talking about. 427,428. Accumulated depreciation is that one, 59,365. And the cost is 908,286. Accumulated depreciation is 78,988. And the cost of the certificate is 11,000. And accumulated depreciation is 1,146. So now, after having calculated all of that, it will give us the carrying amount at the end of this accounting period. And carrying amount for the tires, carrying amount of the tires is 829,298. 829,298 for the tires. They are the tires. We had the carrying amount of the tires. I want to check if that is the tires. Yeah, that is, yeah, the engine. 829,298. That was the engine. 829,298. 829,298. There's 829,299 and 8, which is the engine here, not the tires. 829,298. So I have to go and check for the air for the tires, and the tires is 368,063. 368 063. Where is the 368,063 coming from? There is 368,063, the carrying amount calculated previously for the tires. There it is, 368,063. Then certificate, it was 9,854. 9,854. Nothing is new here. 9,854. Just want to make sure that this figure does not occupy much space. We have 829,298, and we have 9,854. And if we add all these carrying amounts, all of them, let me just calculate them for you, though we have done them before. It is a total of 2,343,056 plus 3,600 or plus 368,063 plus 829,298 plus 9,854. I don't know why it says invert. 2,343,056. Check. Oh, is the 82, 829 to 98 plus 9,854. The carrying amount is 3,550,271. This was the carrying amount that I calculated previously. Let me check if did I get to such carrying amount. Yes, we did have the total CA 350,271, exactly the same figure. So as I said to you, either you are doing it from the table format or you just do the calculations as instructed, you still get to the same answer. You'll get to the same answer. But I'll still proceed and do all the calculations because it is necessary to know the table recording or the disclosure, in other words. So now I proceed on that same note. Now I will not be doing the reference for everything, but very important. So now that we have this carrying amount, then we can compare the carrying amount with the RA, which after comparison we realize that there was no impairment. Then now we have to derecognize the engine. And the derecognition of the engine, we have to take into account now the depreciation for the current period. The depreciation for the current period. Then we take into account the depreciation for the current period, which is only for 2 months. Then we have to account for the depreciation for the 2 months period. Then that depreciation for the 2 months period was calculated only for the engine that was damaged. And the engine depreciation for 2 months, if you remember, it was 31,595. That becomes negative. And we had a carrying amount. Then we record the carrying amount. And the carrying amount of the engine was 797,703. That is what we record again. Then after we record the cost in the same column, and the cost of the engine is 908,286. Then after we have to take into consideration now the amount of the creditor. We have to take into account the amount of the creditor, less depreciation creditor received from the supplier. We have the amount received from the creditor, and the creditor gave us 115,000 rands. Then now we also have accumulated depreciation that need to be accounted for, and our accumulated depreciation will be 110,583. Where is this accumulated depreciation coming from? We take the depreciation of the previous year. Remember, depreciation of the previous year for the engine was 78,000. Remember, it was 78,000. So if we say 78,988 plus 31,595, that gives us the total accumulated depreciation that must be derecognized from the books of the business. So now the cost is recorded as positive, accumulated depreciation is negative, and the carrying amount of this engine is recorded as positive. Therefore now, the carrying amount is positive 79,793. Then after we have the cost, we have the accumulated depreciation. Then from here now we can close the carrying amount. Remember, I said the 30th of September, meaning 30th of September in the year 2006. We record that carrying amount, depreciation. Then that is how we record. We're derecognizing the accumulated depreciation, derecognizing also the depreciation, and recognizing that the creditor did grant us a credit. Then after, the last part will be the impairment loss. The last part will be the impairment loss. This one you just have to know which figures get to be recorded. Impairment loss, we know that it was 682,703. We are more of doing the same thing that we did in the journal entries. Then now from this stage we go to the next level and we calculate the carrying amount of this asset at the end of the year. Now, for us to calculate the carrying amount of this asset at the end of the year, we first need to know that, let me look at the engine, if it's the second or the third, 1, 2, 3, it is the third part. So now we have to record the engine. That was the new engine costing 950,000 rands, which is the cost. Remember, all other assets cost were already recognized, so I don't have to recognize the cost of the engine again. Then for all other assets, the residual value for all other assets was 120,000 rands. In fact, for the engine, then this will give me the depreciable amount. Depreciable amount will be the sum of the two, and the depreciable amount will be 830,000 as calculated previously. Then after we take into account the useful life, the useful life of this engine was 5 years. Then we have to multiply this by the number of months. Then we say months, we term this by 10 over 12. Then after multiplying this by 10 over 12, it gave us depreciation, or it will give us depreciation for the full year, depreciation for the damaged engine. And depreciation for the damaged engine was 183,333 rands. So now we have calculated depreciation for this new engine. Therefore, now we need to know the carrying amount at the end of the year, which is made of the cost minus accumulated depreciation. And the cost of the first part, which is the main body, is 2,404,286. The cost doesn't change, 2,404,286. And the second one is the tires, 427, 428, 427, 428, the engine 950,000, and the certificate 11,000. And the depreciation or accumulated depreciation for the new engine is 183,333. And Total accumulated depreciation for the certificate, it will be 1,146 plus 2,750, and this will be 3,896. 3,896. Then for the two now, the main body and the tires. Remember, the main body had a depreciation previously, which was 61,000. There was 61,230, 61,230, plus depreciation for the full year. And I did calculate depreciation for the full year when it comes to the main body. Depreciation for the full year of the main body was 146,952. 146,952. Then this will give us the total accumulated depreciation. Total accumulated depreciation for the main body, 208 or 208,182. 208,182. Then I say minus the cost of 2,404,286, and this gives me the carrying amount, and the carrying amount will be 2,160 or 2,216,104. Then the second asset is the tires, which is the last one. The tires. Depreciation for the tires. Previous year it was 368,063 plus. We say plus. Depreciation of the tires for the full year was 142,476. 142,476. Then that will be 50. That will give us 510,000. May I just recheck that. No, it can't be 510,000. We had, oh, that was carrying amount. So the depreciation was 59,363, 59,365, in fact, not 363 plus 142,476. Then that will be the total accumulated depreciation. Depreciation of the last year plus the one of the current year gave us total accumulated depreciation, 201,841. Then we say minus 427, minus 427, 428. This is 225,587. 225,587. The new engine is 950,000 minus 183,333. Then 183,310 or 138,000. Why am I making this mistake? 138,000. This was 138,000, not 183,000. 138,000. Then we have 950,000 minus 138,333, and this came to 811,667. And the certificate, draw a line here, certificate will be 11,000 minus 3,896, which is 7,104. So I'm a bit quick because I've calculated all the numbers. This is just a matter of you going and confirm and match what I'm doing with what I've already calculated and explained before. So now once again, if you say 226,104, 225, and 21167, and 2107, you'll get to the same carrying amount, which will be 219610 main body and 288 and 211667, all the calculation 2257867104, then that will give you the same carrying amount. So now then you compare that with the two. Let me just confirm again. We have 2,196,000, which is the main body, 2,196,000, 2,196,104. That is the first part, which is the main body. The main body, yes, 2,196,104. Yes, if you check all of that, it will give you the same CA that we calculated previously, and that CA was 3,240,462. So now by getting that, you compare it with the RA again, and after comparing that with the RA, you still get to the impairment loss of 540,486. Yeah, this has been a bit of a long exercise, honestly, because I have to do two calculations at the same time. Otherwise, this is the gist of all these calculations. Very important is this table that you must make sure that you must. Unfortunately, for me, it has to go to the next page. But as long as you know the principle of calculating the carrying amount and the depreciation for the number of months, everything becomes easy. And you need to know that in the table format, whenever you are to calculate the carrying amount, you need to do this where you have to calculate the cost, where you have to bring the cost price at the bottom. And you can say this is the cost minus accumulated depreciation, this part all the time. Then the net of that becomes the carrying amount. And you can see that previously when I was required to calculate the carrying amount, this line exactly, this part I had to bring my cost price down and bring in that cost price, and I minus accumulated depreciation, which was only depreciation for 1 month, depreciation for 5 months, depreciation for 5 months, and depreciation for 5 months. But in the second part now, I had to say depreciation for this 5 months plus depreciation for the full current year for all other assets except the engine, because the engine was not in the business for the full year. The old engine had to be derecognized. This was the removal or the derecognition of the old engine, where we minus the depreciation, where we minus the creditors allowance or the creditors amount, where we minus the accumulated depreciation and the impairment loss. Then after recognize or at the same time recording the amount of the carrying amount and also recording the amount of the cost price. Then from there, you again require to calculate the carrying amount. You say the same thing, cost price minus the depreciation for the 5 months and take into account depreciation of the current year. So now I think that is enough, guys. Let me say thank you, God.